Hi, this is PR Sundar. Welcome to Post Market Report sponsored by Delta.Exchange. And today morning I could not do pre-market report, and yesterday evening also I could not do post-market report. So due to some problem, for the next few days I will be doing only the audio podcast. So I will not be doing any video. There is some technical problem, so I may need about a few days to settle that. And coming back to market, so who expected Nifty to fall 500 point from intraday high to low, and Bank Nifty to fall nearly 1000 point from intraday high to low? Such a severe fall. And probably some people decided to book the profits, and these people are very, very smart. Today, weekly expiry, just one day before expiry, not weekly expiry. And just one day before expiry, the option premiums will be very, very low. And probably they would have bought the put option and sold the call option. And in Bank Nifty, today is a Bank Nifty expiry. So probably they would have bought put option in Bank Nifty and sold the call option. Then they would have pressed the sell button. And the markets went for a free fall. And this selling was expected, but nobody thought that this will come today. That's because normally markets show this kind of behavior only when there is a trigger, and today there was no trigger. Yesterday the US markets moved higher. Today Asian markets were okay, and today Nifty gap up open. So in fact today it's a fresh all-time high. So nobody expected today the fall will be so severe from intraday high. And FIIs at the end of the day, they've sold just only for 1,300 crore. The domestic institutions have actually bought for 4,700 crore. So net institutional buying is 3,500 crore. But the market tells me a different story. In fact, large caps were okay. And there was a severe fall in the mid cap and small cap space. I think both mid cap and small cap indices fell 5% from intraday high to intraday low. And even on a close to close basis also, the fall was about 3.5%. So this is one of the worst fall in this year, we can say. And but this is warranted. I'll give you one simple comparison. Sometimes in the month of January, if you want to sell a call option and put option expiring in December, that means it's a 1 year expiry, the premium will be around 2000 to 2200 point. So which means that in 1 year, Nifty is expected to move 2000 to 2200 points. And you can also see when we are trading around 21,000, when the VIX is around like 11-12%, 11 and 12. So that means Nifty is expected to move 11-12% in 1 year. But what has happened in the month of December, from the low of 18,850 and today's high of 21,500 plus, so it has shot up 2,600 point plus. So what Nifty should move in 1 year, that has moved in 1 month. So naturally, some people will be booking the profits. And today morning, all the call sellers were running for cover. Then afternoon, the put sellers were running for cover. And nobody expected such a very, very big, fast and ferocious fall. And in fact, there was nothing wrong globally also. In fact, European markets, some markets were in green, some markets were in red, but mostly flat. US futures were slightly down, and that is understandable because, US market also, just like Indian market, kept on moving higher after the Fed event. When Nifty moves vertically like this, 10%, 12% in just 1 month, and when the fall comes also, it will be equally very, very severe. And that is what we have seen. And today's fall, I don't think that it may be ending, reversing tomorrow. but this kind of bigger fall, will have some more effect, ripple effect. So maybe another 1 or 2 days, the markets may become dull, okay, but likely to fall a little bit more, if not very big. And then today, Nifty spot broke 21,100 and closed exactly around 21,100. I think the precisely 21,101. Of course, because the markets have fallen so much in the last half an hour, the weighted average is showing 21,150. So the excess speculation, I think it has come to an end, and winning of BJP in 3 state elections, and then Fed event, and both have been factored in. So I think at least from now, the markets are likely to consolidate. And I'm talking about the longer term perspective, not shorter term perspective. And the longer term options like June and December expiries, even 25,000 call options were shooting up like anything. So today, all that has come into some kind of a sanity. So option premiums likely to fall even in the longer term. Of course, shorter term, it's because of time value, so the things can go here and there. So it was a total disappointment for bulls, but it was expected. It was not totally not expected. So now, market for the longer term, it's good only. So this kind of, fall is an opportunity for people if they want to go long now. Okay, so but you may wait for 1 or 2 more days when the action happen. So that day is not the right time. So as I told you, there will be some ripple effect. Some more fall may happen. I will not be surprised if Nifty breaks 21,000 before the end of this expiry. But it all depends upon the global cues. But domestic institutions is all out to support the market. So, maybe another 200, 300 point market may fall. And then after that, market may stabilize, or it may even continue to move higher also. So let us see what is going to happen tomorrow. All the more important expiry date tomorrow. So let us see what is going to happen. Hope you enjoyed listening to this audio podcast. Thank you for listening.